Traders are currently placing long position in favor of their support. They're looking at the support level. They say, hey, Mona, this thing has been retesting this level multiple times. I'm telling you, this thing is going up. Right? This thing is going up. I'm telling you, man. Like, I've seen it. Like, did you hear that? Like, there's always validations. There's always validations behind each and every move that traders make within the market. Yeah. No, like that thing is going, it's going up. Yeah, you see, it's in a channel. You get to throw it even because you are very artistic. As traders, we are more of architects than traders. So you bring out your architectural skill. It's sitting at an angle of, right? You add your architecture skill to your mathematical skill, right? A bit of arts and culture there, right? But you fail to see where the market is resting. Okay, we have seen it. You have tested multiple times. Let's even pull it here and then show the first breakout. Yeah, that was the first breakout. It came back to retest it again. The validations, right? The validation. That was, yeah, we're going up. There's no way this thing can go down. Look at that previous candlestick. It signals that the buyers are coming. This is just a retracement, nothing much. Then when they hit you with a break below, trust me, the adjustment will be there. You will find a valid reason on why the needs to go up. You will always find your validation. There's always a validity, right? But again, when you are looking at this, yes, we need to push to the upside in order for us to feel the tail. But even if we drop, when we come back, we will still feel it. So there is no time or there is no duration in which the market needs to come back to feel the tail. This is not a gap, it's a tail. Even a gap, the market takes so long before it comes back to fill it. Exhibit A. Let's go to Exhibit A. No, I'm going to use USD Mexican peso as an exhibition. Exhibit A. When was this gap formed, guys? Do you see? Okay, you can see it. It's on a, let me go to a smaller time frame. Actually, let me go to a 1 hour time frame. Some of the things you will miss them. Yeah, you will miss them, sir. You will miss them. Some of the things you will miss them. This one, let's just remove it. It's no longer important. Do you see this? I know I deviated from where we were, but we are here. It's just an example. Do not look at the currency, look at the example. This gap has been formed since 21 February 2020. Do you see that there is absolutely no duration in terms of determining when the gap will be filled? There is no specification. This is not a support, or this is not a supply and supply and demand zones. These are gaps. Gaps are the same as tail, right? The market can be away from that specific area for a very, very, very long time, and you won't even see that the gap was there. Can you guys see this? Exhibit B. Very same thing. I'm gonna go back. Historical data show you that we had the gap somewhere around here. Where was that gap? There we are. There we are. Gap 1, it's filled. Gap 2, unfilled. Is there gap 3? Probably. This one was filled. Okay, let's just go forward. Okay. Now, do you see where the market is going now? Like, I'm not trying to show you USD ZAR, but I'm just saying Gap one, we done, right? This is gap one, right? We filled it. Where are we going? Where are we going? Where are we going? Gap two, 15. Gap, we're going here now. Because first of all, we're done here. The filtration process has occurred, we're done. Any push to the upside is just merely a retest. We're here now. We're still struggling to break below this level, but we will break below this level. This is the next stop. I don't know if you guys get my point. Do you guys get my point though? That means we're coming here now. Okay, let's go up. Let's go back to the DXY. These things you need to see them, say. You need to see them. If you cannot see them, if you cannot spot them, it will be very difficult. Like you need to see them. Someone is not seeing it. You need to see it. You need to be here. Mustn't sleep. Mustn't understand your charts. Know them. Not know what happening. Everything. You need to be in that position so that, like, if you are taking a loss, you can explain it. You can't just be saying that, oh, that's a false breakout. No. You need to understand, why does the market feel the need to continue dropping in value, even if I view this market as being what? As being bottomed. It has bottomed or it has topped. The question is that why, when I say it's bottomed, it continues to decline in value? Then go look for something that might be a clue. There's something that is missing, the link that needs to be filled. Go look at it and then say, aha, that's where I find you. So again, the main aim of me doing that USD ZAR and USD Mexican peso chart, it was just to show you that the market can be away from a specific area up until it comes to fill it. So whenever you're looking at tails, whenever you're looking at gaps, always know that the market can actually push away from it before it comes to fill it. It has no duration. There is no specific duration in terms of saying that the market has to come back and fill this tail or fill this gap within a certain amount of time. The only duration it has is that within the first hour of market open, the market must fill the gap, or else the market will trend away from it for the whole week before it comes back to fill it, right? But with the DXY, that's a whole different story. DXY has a mind of its own. It opens, it makes a gap each and every day, and it fills it each and every day. Whew, that was a mouthful. Are we okay? Oh, the aha moment, yes. Mr. Jabulan, I want you to, like, let's give Mr. Jabulani a chance. Mr. Jabulani, I want you to list the 4 components of market structure. Mr. JB, can you please list for us the 4 components of market structure? Based on your question, list them by order. Don't keep us waiting for too long, sir. Can you please list the 4 components of market structure? 4 components of market structure. Okay. You see, it's time, volume, open interest, and price. So now you have actually answered your own question. You see, the fact that you have listed, I honestly forgot the other 2. Say, hey, Chinege, how can you forget? You have to, the fact that you mentioned time first, that means you know the importance of time. Time is always important. It's always important. The fact that right now we're having this Zoom session, this is time. The time that we're taking to be in front of this chart and discuss Forex, that's very important. The time, that's a precious thing that you can never get back as well, right? So here, the time is important when it comes to supply and demand set. That's where time is very important. Obviously, even in terms of executions, in terms of movements and everything. But right now, what I'm talking about the gaps and the tails. I'm saying that, like, they are not bound by a specific time, similar to supply and demand. Are we okay on that, guys? Okay. So as we are, what we're currently looking for right now is that like we're looking for that push to the upside, but we do not see, oh, hey, we do not see, oh, the time is not, the market is not willing to push to the upside. But what we can understand is that we can understand the fact that we had this impulsive phase followed by a corrective phase, whereby we're currently trading within the last leg of the impulsive phase, right? So if we are trading within the last leg of the impulsive phase, we can also be in a position where we determine this entire area. Because if we can look closely at this area, we can actually say that this area is where the market was in a consolidative state here. Therefore, we just recently broke out of the consolidative state. We can see the market pushing to the downside in order to complete the last leg of the 3 cycles that makes up a wave. So that is one thing that we can take into consideration. Are we okay on that? So if that's the case, therefore, we can also look at this in terms of like, oh, you know what? The market made an impulsive phase, right? Look at this. Look, I want you to look at it. We're still on a daily time frame. The deduction you get from each and everything is very important. So we can actually say that, you know what? This is an impulse correction, and this is the last leg of the impulsive phase. Therefore, we have completed the 1, 2, 3 cycles that makes up a wave. And right now, what are we doing? We are currently trading within the second phase, which is a corrective phase. Therefore, the last leg of the impulsive phase is now acting as the first leg of the 3 cycles that makes up a wave, which now we can say that this is a bit of a corrective phase whereby the market is currently trading within a asymmetric triangle. I'm not boring you guys, ne? Do you guys see this? Or is it am I being delusional? Someone tell me if I'm being delusional. Maybe I don't see things the way I need to see them. Okay. Right now, I'm saying that, can you see this? You got that impulsive phase, the corrective phase. Oh, the corrective phase, you just happen to form roughly around the right place. Hey, you just happen to form around, the continuation pattern just happened to form around the support level. Can this be the continuation pattern that we have been waiting for us to push a bit further to the downside? Probably. Let's go on a 4-hour time frame. When we go on a 4-hour time frame, saying that the market has made an impulsive phase, a corrective phase, currently trading within a corrective phase. So we're saying that this is an impulsive phase. So that means that we have the likelihood of seeing price continue to decline in value. Those are the probabilities. We might end up seeing price declining in value, pushing as low as this area here, therefore completing the last leg of the 3 cycles that makes up a wave. But because we understand that the trend lines and all this technical analysis, right, are subjective, therefore we know that there is someone who's seeing this.